Good afternoon, welcome to GrainTV. It is November 13th, 2012. I'm Logan Burgess. Joining me to my right here is Cody Bills. Well, Cody, let's jump into fire tip here. See where the last trades were today in the grain complex. Corn and soybeans both taking a little bit of a bounce here. Corn up 4, soybeans up 4 1/4. Wheat did slide lower here today. The big story though, really, we have corn and wheat both kind of stuck in a range-bound trade. Soybeans though have been falling out of bed in the last couple sessions. Looks like we may be finding some footing here today finally. What's kind of your take on this bean market? What are you looking at when thinking about where are things headed?
Yeah, well, let's actually look at the 5-minute chart and just look at how we traded today. This is kind of important because we've been talking about that $14 price level for a while now. Notice here, it was very orderly. We actually traded right down through that 14 level. We were below it for a significant portion of the day, but by the end, we rallied back and we seem to have pretty decent volume on the close. The bottom line here is $14 held. And I think, when you look at this on the daily chart, it presents kind of a doji-like price bar, which really would support that we're pausing. The bears are no longer in control, at least for at least today. I would suggest that we've put in at least a support level, that 1391 low, that will most likely hold for at least a day or two as we pause or start to move higher here in the next coming days.
Right. Here recently, the bears have clearly been in control of this bean market. They're going to point out to the fact that we are now below the 200-day moving average. We had a 10 million bushel increase to ending stocks at last Friday's report, and we have a very large South American crop here looming. Cody, in terms of $14 holding, what's your rebuttal to that? What would you say to those bears out there right now?
Well, I'd say right now, yes, the 200-day moving average has broken, but the long-term trend has not broken. And if you look here, we're looking at the January 2013 contract, and you can see here this is an uptrend. We have higher highs and we have higher lows, and we're coming down and testing that long-term trend here. That's somewhere around 1360 area. So the bottom line here is that's going to be a key battleground. I think this is a warning for producers. We've broken that 200-day moving average. That's a warning. You should be paying attention. You should be thinking about possibly hedging some of that price risk for that 2013 crop. If we break the long-term trend, you really need to be focusing on doing some sort of price protection, especially because you're not protected for insurance for another couple months or so.
Right, okay. So that's kind of the area that we're watching right now. We'll keep you posted on that here on GrainTV in the weeks to come. If we kind of look at the demand scenario, Cody, we did get some good data out, some good fundamental data out this morning by way of the export inspections report. Once again, kind of a continuation of the trend that we've seen here for the last several weeks. Corn has disappointed and soybeans beat expectations quite handily. If we look at the numbers here today, 64 million bushels left the country last week. High end of expectations were 59 million bushels. So certainly supporting the bullish story there. Soybeans in particular have been riding that wave now for a while.
Yeah, everyone's talking about, we've been selling so hard for soybeans, everyone kind of has this bearish mentality, but exports are at a pretty rapid pace here. They're actually at a pace greater than those the sales that we've seen. And I think, we've seen China on the sidelines here for the last couple weeks. And right now, the USDA has China booked at around 63 million metric tons of imports that they're going to need. Typically, the U.S. wins around between 40 and 50% of that. That means that we have about 12.5 million metric tons left to sell to China. I think China's going to be back in the game here. We've seen good exports for other countries that don't typically buy from us. Bottom line here, exports are running hot. Sales are running hot, and I think that this is a good fundamental demand for soybeans, and I think that's another reason why we could see bargain buying down here around that 14 level, and this will be at least a short-term bottom, I think, for a couple days.
Certainly, the demand scenario does indicate that here. We're going to have to keep an eye on the technicals here in the days to come. Should be a couple days where it's very important to watch the close here in the next couple days as we approach 14, potentially this low side technical support here, but we'll keep you posted on that here on GrainTV. Also, we tweet all throughout the trade day at GrainTV's on Twitter, where you can find us there. I think that wraps up our show here for Tuesday morning. Tomorrow we'll be bringing you NOPA crush numbers there. That'll be another very important thing for the soybean market in general. We saw in last Friday's report they raised crush expectations by about 20 million bushels there. It's going to be very important to see confirmation of that out of tomorrow's report, but I'll keep you posted on that here on GrainTV. Thanks a lot for joining us. We'll see you tomorrow.